All right, so here we are. It is October 13th. This is the pension task force. And we have two members that aren't here with us physically. One will be here shortly, and Representative Copeland Hans is with us somewhere out there in the world.
Good morning, all.
Oh, there she is.
Good morning.
I
I'm
believe.
here, but the bandwidth at this hotel is pretty narrow, so I'm going to stay off video for the most part. And I don't know what that means if I need to raise my hand, but we'll figure it out along the way. Hi, all.
Hi. Or just butt in if I don't know raising hands. I guess just butt in. So. So we're for those of you who haven't, and Sarah, I am so sorry you're missing the treats. And for those of you who haven't helped yourself yet, there's pastries over there meant for you guys also, anybody who's here. So we thought that perhaps a bit of sugar and carbs would get our brains really churning here. Anyway, and there's lots of them, so feel free to take as many as you want. So review from the last meeting, any thoughts, comments? Anybody?
Yeah, I've just been reflecting on Mr. Kim's testimony, and I found it very interesting, and I think it confirmed some of the prior testimony we heard in the committee, particularly we heard from Dan Doonan on the economic impact of pensions, and I thought Mr. Kim's testimony really furthered that point, as well as some of the testimony from Nazra on the sustainability of our pensions. If we look at changes, I think we have to not only look at potential savings, but I think we have an obligation to look at what costs those savings come at. And I've maintained that we have to look at how behavior might change some of the assumed assumptions of the plan, and the impacts on recruitment and retention, and provision of state services, as well as the broader economic impacts. And just looking at those broader economic impacts, and considering the testimony we heard from Dan and Hank Kim, I think it argues that we need to be really mindful of those impacts. And I thought the sustainability analysis was also very interesting. The unfunded liability is this fairly daunting number, but it does represent liabilities over the life of every vested participant. So putting some context around ability to pay that over time, I thought was very helpful. And again, it argues for a measured approach in my opinion. So as we hear this testimony, I just we're able to let the subject matter experts take that testimony to heart and reflect that in the committee's work.
Anybody else have any thoughts? Comments? We missed you, Leona. All right, well, let's just jump in. If Chris and David are ready, it isn't quite 9:30 yet, but see no need to wait until 9:30 just because it says 9:30 on the agenda. Are you ready?
Sure.
Okay, and there are copies over there.
Things are running much smoother from a technological perspective.
We've got a long way to go.
Please,
Sorry.
don't say anything.
Good morning.
Good morning.
You all, thank you so much for the thoughtful aggregation of pastries. Haven't been eating enough pumpkin cheesecake this month. So.
Well, there is no pumpkin cheesecake there. I am
That's 'cause I
sorry.
ate it all.
Oh, but it's from your favorite place.
I know, I do like that place so much. David Hall and Legislative Council and Legislative Joint Fiscal Office So let me just apologize right after that, that the pagination on the document that you received the printout of is all messed up. I have fixed it in the system. And I assure you that when it is released in its final form, you will have both today's meeting included in the interim report and the pages will be correct. There was a Microsoft Word issue, if you can believe it. It does not like it when you try to use different page layouts for different kinds of documents in the fields, and then that messes up the segments, and then that messes up. But I think I figured it out with the help of my, seventh grader. We're in good shape. I don't know how you want to proceed. I mean, we try to respond, and I'd say did 99% of the response to the work that you guys requested in the last time we were together. And I trust you guys have opportunity to at least skim what is your current document. And I guess we can either really go in another deep dive, or you can just tell us if there are issues.
Well, first, let me ask if Kate,
I was just gonna say, I have not had a chance to skim it, so what I would really like is if you and Chris could just tell us what changes were made to the document from last time.
That's something that we can do now that it's all commissioner stuff.
We could probably do it at a high level, because this version doesn't have the track changes. So I could say, we can go over at a high level with the changes and additions where there were, you will see that there are some typo corrections and just some additional footnoting and things like that throughout the document. And some of the footnotes, I'm real nitpicky about like the alignment of footnotes being consistent. That will all be done at like the final drafting stage, because I noticed there were a couple issues there. But I mean, if we want to start maybe at page 3, creation of the
Chris.
tab.
what I would also say is people, as we go through it, when they're going through it, if you remember issues that we had talked about and requested changes, to highlight those as we're going through, if they're not at the high level that Chris and David are going to do. So if, as we go through it, if you see things that you, looking at your, or remembering your old, the comments from before. Does that make sense?
Yep.
Okay.
So on page 3, I think the only substantive change, David's graciously scrolling through my track changes version, but I think the primary change on this one is we added that first footnote in response to a comment during the last meeting that we should put some dollar figures around that target. And so that footnote number 1 aims to accomplish that. On page 4, I added the word recommend at bullet after point E to try to clean up the language so it flows a little bit more coherently from what the legislative draft reads.
Molly, I believe that was your.
Yeah,
recommendation there to make it flow better.
Bear with us just 1 second.
Remember that we did reorganize where everything falls. So
Yeah.
the track change versions we have, the last thing to happen was cutting and pasting all the different pieces into the new places. So it's a little bit disjointed in that respect.
If you go to page 6 and 7, we added the last 3 bullet points under principles, as well as a introductory sentence at the very, very beginning of the principles section. We're trying to lay some context.
If we go back to page 5, on the bottom of page 5, I believe Kate is the question that you had, very last sentence on page 5. That I can't remember what it said then, but
Yes.
Yeah.
Could very well exceed.
Yeah.
Yes, that was help from Mr. Peach.
Peachak.
Yes.
on the new page 5.
well, no,
Yes.
yeah, on the new,
Yeah, correct. It's at the bottom of the statement of the issue
Okay.
paragraph.
At the statement of issue, yeah.
And then, yeah, on page 6 and page 7 under principles, we get an introductory sentence to sort of segue into why this section is there and what its significance is, and added 3 bullet points at the end to try to illustrate 3 of the points that the task force has made some agreement on, sort of in a principled context, that these are the types of things that should be considered when evaluating any potential changes and making recommendations. We're open to any wordsmithing suggestions on those 3, but this is our first stab at it.
We had some discussion last time about those, like, Eric, I think you had said something about the principles being a more general guide, and then those were things that came out of the work. Do you remember that discussion at all?
Yeah, I think I was, and I also had a chance to skim this. I didn't look back at the principles. I looked at some of the later pages. So I'm happy to see some of this content reflected here. I missed it on my initial review. Yeah, Molly, I think what I was trying to say was at the onset of our work, we agreed on certain principles that would guide us. And then as we've set in on our work, those principles have influenced certain decisions. And those really, principles are, I think, it's something on the onset, beginning, and influencing the decisions is really more kind of an outcome. But I'm trying to think, I think we can, I have a suggestion. I think we'll work with this. So I'll make it.
I just wondered if we might want to say before those 3 additional ones, something like, in the course of our work, we added the following principles, or something like that. It might reflect it a little more. Doesn't.
We're open to any suggestions you all have on how to work stuff this.
Do others see a need to do that, or is that just?
If you look at the first sentence under principles, it says the task force came together and adopted the following principles to guide its work.
Yeah. Well, and that's what I was actually looking at, meaning that when we came together, we adopted the first 6, and then it was later in the process that we added the others in. So that's why I was clarifying it, but I'm not married to it if others don't agree.
Oh, we could delete came together and just say the task force adopted the following principles to guide the work and recommendation.
And I'm just fine with the way it is.
Yeah, I am fine too, but I'm just offering.
Yeah.
Possible solution that they can quickly edit to improve the document today.
Any suggestions of a final suggestion about the way we would address this, or leave it the way it is, or?
Sean, can you repeat your suggestion?
Thank you. Let me take off my mask so you can better hear me, because I know I'm muffled. So what I suggested is in the first sentence under principles is removing the words came together and just that the task force adopted the following principles to guide its work and recommendations.
Doesn't say we did it the first meeting or the 8th meeting. Anybody okay with that? Okay,
I like that better.
okay, all right, okay,
We will make that change.
thank you.
Yeah, there were no changes made to this task force membership section on page 7. That goes on to page 8. There was a revision to the last sentence of the first paragraph under hearings and testimony to clarify all full task force meetings were open to the public and made available online, with a footnote that explains the technical outage that occurred. A typo was corrected in September 9th to correct Mr. Dunin's name, and some language was added under October 6th to detail what occurred at the last meeting. And I would assume we'd be doing something similar at a very high level following this meeting. Just put 1 or 2 bullet points about what all was discussed with links to any appropriate materials after this meeting. Sir,
I think one thing I noted last time on September 9th, where it just says overview of revenue analysis. Just a quick little sentence explanation there.
yeah. We added the actuarial request parenthetical references right below that, but I understand your point. I think we'll just. Overview of actuarial revenue analysis.
Just wondering if the description for October 6th.
So what are you adding there? Is everybody-
Under September 9th?
Yeah.
I was gonna clarify, under overview of revenue analysis, overview of actuarial revenue analysis, linked below. Because that's what those two subsequent bullet points are.
Is that meet everybody's needs? All right, okay.
Just a question on October 6th. Do you anticipate that description for that meeting being fleshed out a little further? I just, looking back at some of the other dates, it looks like the subjects that the witnesses testified on is fleshed out in a little bit more detail than it is on October 6th. So that kind of looks like still a work in progress to me, but I don't know if I'm reading that incorrect.
Yeah, we can add a little more to that second bullet.
Thank you.
So if you, you have the language right now, or if you can tell us by the time we're done, so we can agree, because we want to make sure that we agree on, that everything is agreed on, any changes, so that whatever draft you do now will be the final.
So let me suggest, Dr. Kim talked about NC PERS unintended consequence study. And then there's sustainability study. So if we add that, then I think we can just say concerning.
You'd add it right at the end of the. So-
Exactly.
Is everybody okay with that, Becky?
And that's only highlighted because he wanted to draw attention to it, right, as new. It won't be.
That won't be
highlighted.
highlighted in the bottom now. So, yeah, the glossary, you won't see right here because it moves to the end. Yeah, so we're on the background section now, page 12. There is that footnote that doesn't have a number is a typo that I fixed on the subsequent version. The 3 needs to be in the bullet or in the footnote that links up to that paragraph right in the middle. But that's a really, really minor thing. I just wanted you all to know that we caught it. We rearranged on the order of the last several bullet points on page 13 in response to comments. So we moved funding of retiree health benefits up and multi-million-dollar annual increases in employer costs down. So that was just a switch of the order.
Everybody okay with that?
I think I reformatted a footnote as well. Page 17 or page 14 rather, we added an introductory sentence and fleshed out in some more details what some of these changes actually were. Spent some time going back through the actuarial valuations and the statutory changes to try to add a little bit more detail on those. So I think it's pretty self-explanatory where that is. You'll see that where there's bullet points added that weren't there in the previous version. And we also added some explanatory footnotes throughout that links to external resources.
Thanks. I had a question back on the background, and it's just a note that I put in my margin. I wanted to make, I didn't have time to check that it was in there just now, but we had talked about how the management of the investments, about just acknowledging that and saying it's not the purview of this task force.
It is, that is mentioned further in the document.
Okay,
I don't know if I've mentioned it's not the purview of the task force, but that is something that, my memory will be refreshed whenever we get to that
Okay,
section, but
okay.
that's something we can add.
okay.
I do know that I addressed it in a footnote, later in the document.
I thought, I had a note here to myself addressed on page 27, but I thought we were maybe gonna put it back too, but that's, again, if it's later, that's all right.
And then we added a final thing in the timeline for 2021. And that formatting issue will be made standard as well.
Okay, are we okay with that?
All right, scope of the problem. So I added a little bit of context in this first paragraph and just reworded a few things and tried to make it clearer. I also, throughout the problem statement section, I tried to take some of the graphics that were in the previous version and make them more legible. So they're a little bit larger. The font is a little more standardized, and I tried to number things and add references. That's the kind of stuff that once you sort of have the order and the flow of the text, you then go back and do that later on to make sure you're not constantly renumbering charts, but you'll see that hopefully these graphics are a little bit easier to read. If any of them are confusing or there's an issue that you think we need to fix, please let me know and we're happy to do that. I have them all saved in a special Excel spreadsheet that we can make changes to afterwards.
You just have you have a parentheses, I think, where it doesn't belong.
Yes.
I was gonna. After there.
Oh.
Yeah, after the word funded.
Yeah.
Yeah, that's, yes, that was corrected on my other version. Then I also, in the section of history of employer payments, I added not only charts that illustrate what the ADEC has done in recent years in a more legible format, but some bullet points that were a little bit more factual about the extent to which the ADEC has been funded cumulatively over the years. That was something that the group raised during the last meeting, so we tried to address that head on as well.
Is everybody okay with those changes?
Can you say that again, Chris, where that is and what you?
Sure, it's the bullet points at the bottom of page 17 and into page 18 that say under history of employer payments. That entire section I added.
Does that section include anything about the OPEB questions? I'm not seeing it.
The OPEB is addressed later in the problem statement. Because this is about funding the ADEC.
Yeah, I know
and
you
there was
said-
that subtle distinction between funding the ADEC versus having a practice that results in an actuarial loss sort of on the back end. That's what happened with the OPEB.
But is that, I just want to make sure that this is factual, where it says the employer has subsequently fully funded the ADEC every year since fiscal year 2007.
Where do you see, which section are you
The bottom
referring
of
to?
page 18.
Feasters.
The Veesters, yes. So that chart is on the following page, page 19.
First, I can see question. So since 2007, the employer has fully funded the ADEC. The ADEC was separate and apart from the OPEB pension, the way that we used to do it up until 2015. Two separate issues, all leading into the same problem. So that the statement that's on the bottom of page 18 is factually accurate. And then later on, I did read that it does mention about the actual corporate fund funding the teachers' retirement costs through 2015. And then the ARPA beginning, that was also mentioned, that's changes to the pension funds. Piece.
Everybody okay? Down to the bottom of page 19, I guess, how pension costs are funded. Next section.
Yeah, in this section, so I reformatted and made some small changes just to sort of clarify how, like, the normal cost works, for example. But the real intent of this is to try to explain to folks what's the difference between the normal cost and the unfunded liability, and how are those costs paid for? And there's also a pretty extensive footnote at the bottom of page 20 that tries to explain the nuances around the timing issues between valuations and when payments are made, as well as I put a footnote in here that on number 18 at the bottom of page 20 that explains what the various current active member contribution rates are. So that information is at people's fingertips. Then page 22 has two graphs that I believe you've all seen in the prior version, but I aim to make them a little more legible. That just shows how these different pension costs are reflected and paid for out of the state budget. And then we made some small changes, just mostly reorganizational under sort of growth and unfunded liabilities and budgetary pressures. This section sort of segues into what has happened to the balance of the unfunded liability in recent years, and how is that translated, rather straightforwardly, how does that translate into additional pressure on the budget? So I attempted to make charts 4A and 4B a little more legible to show just how, really going back to 1997, but trying to distinguish when the current amortization period started, how the funded ratios have declined while the balance of the unfunded liability has increased pretty substantially over time. And the okay, sorry about that. Page 24, we added the word could very well at the last sentence of the first paragraph. And tried to add some context around what we expect future growth would be in a status quo situation. Chart 5 on page 25, you've already seen this data, but I just updated the chart to make it a little bit more legible about what the ADAC has done going back to 2004 and what we project to be going forward based on the FY20 evaluation, and assuming that all actuarial assumptions are consistently met moving forward, of course.
I have one little question there, just not about the documents much, but when we get the FY, the number at the end of this month, will we be able to update those kinds of charts to include that? Or
Yes. I think what would, with timing purposes, I think we would revise charts and put them in the final report.
Okay, that's what I mean, yeah, okay,
So it shouldn't be, I mean, it's going to be very tedious to
Yeah,
update
that's
all the
what I-
charts, but it's not going to be that hard.
okay,
It'll be time consuming, but we're going to build that into the process.
okay,
We just don't have that data
I know we didn't have
right
it
now.
yet.
Yeah, unfortunately, due to timing reasons, FY20 is the most recent
So
thing we've got.
close,
Yeah. I also added on, I'm sorry to go back, but on the bottom of page 24, I added a footnote here just to try to explain how the ADAC works. And, what happens when you reach 100% funded is the ADAC goes down. So it's not realistic to assume that we would have like a 125% funded situation under our current funding policy. When we're fully funded, or if we're excessively funded, that actually offsets the amount of money that the employer would contribute into the system. That's what happened if you go back to the FY07 actuarial was either 07 or 08 actuarial valuation for VSERS, when they were $11 million overfunded. That actually, that gain is amortized just like you would amortize a loss. So that kind of cuts into the amount of normal costs that you would otherwise have to pay. So I just want to make sure that's one of those weird little nuances in the actuarial math that doesn't always come across with folks. But I wanted to make sure people understood that, you know, all of the math points you to get to 100%. It doesn't point you to get 120 or 130. It points you to get to 100. Okay. I think we covered everything on page 25.
I'm sorry, I was just digesting that.
Uh-huh.
If I could just go back. In that sense, you know, the graph on chart 5, page 25, those payments would change significantly after 2038. And I guess I'm a little concerned that as displayed now, it kind of paints it in the worst possible light.
So we do add so in the footnote, it does mention that I understand your point, yeah. We might be able to clarify that a little more. There is somewhere else in the document that we mentioned that once the system is fully funded, only the normal cost would be owed. Well, actually, yeah, now that I reread footnote 19, it says it in footnote 19.
It does say conceptually, it doesn't say, for example, what the normal cost would be, and what the employer share the normal cost would be in 2030. In 2039, that graph is that chart is gonna look different.
And so I think what we could do is maybe add in the chart a note that says after FY 2038, only the normal cost would be owed and the payment would be expected to decline. You know, it's hard to know exactly what the actual number would be in 2038 because we know what the normal cost is now. We don't necessarily know what assumptions are going to change between now and 2038. So we can make some reasonable assumptions, if you will. I know I say that word a lot, but the numbers that are in this ADAC chart are based on the current normal costs and what the current actuarial projection is for amortizing the unfunded liability based on what's in the valuation from FY 20.
In that last paragraph, page 24, it puts the normal cost growth at 3.5% for VSERS, 3 for VSERS. So
But that assumes that as a percentage of payroll that it stays what it is right now.
And that's what's in the evaluation.
Correct.
Right.
It does seem to me, Eric, I'm not sure if this is what you're saying, but I'm thinking as a visual learner that like the visual is very powerful. And so if there's a correspondence visually for the words at the bottom of page 24, that would be helpful. If there's a way to make that visual to show that the ADEC is paid off and therefore the graphs are reflected in this way. Kind of like saying our work is done, like that work has been done at that point, you know?
Let's hope.
Let's hope.
We
Yeah, well,
hope,
that's the
but we don't
projection.
know.
And we try to add that caveat in the footnote that we hope it is 100% by then, but as Representative Gannon says, we don't know for sure.
But we projected through 2038.
We projected through 2038 based on what we know right now.
Mhm.
What we
Correct.
don't know is what is going to happen between now and 2038 that could cause the unfunded liability to grow even further and perhaps prompt a different track on amortization.
Oh, I take that point, but you could just as you projected through 2038 in chart 5, projected through 2040.
We could add 2 years and show it drop, but I would add a caveat sentence to the bottom of it in a bubble saying that's an assumption based on projecting out from the normal cost that we know right now.
Yeah, I think we have to be really careful about making sure we don't say that that is what is going to happen, because we don't know that that is what is going to happen.
Oh, yeah, I think that caveat exists right now for years 2023 through 2038. Adding 2 years doesn't necessarily change that caveat, but this is a projection. Based on the assumptions. And I think that part is reflected in the either the footnote or one of those two paragraphs crossing 24 and 25. Yeah, under current assumptions at the bottom of page 24. Normal costs are expected to grow. I think it reflects that as a projection, not a definite.
Yeah, and what I was saying earlier is, yes, we're all assuming that the cost in dollar terms will grow with payroll 3 or 3.5%, depending on the system. I think the caveat is, when you translate that into dollar terms, that can vary based on whether the actual total normal cost as a percentage of payroll raises. If actuarial assumptions change again, and the rate of return gets lower than 7%, for example, that's likely going to increase your normal cost. So that will translate into higher dollar terms that would then still be projected to grow by 3 or 3.5% annually with payroll.
And we know that those projections can change in either direction, and that's part of the assumption of the whole document.
But if the group wants, we could add 2 more years and show that. I don't know if I'll be able to have that turned around by the end of the day today, but if you trust me to make the change and make it consistent with the way the current chart looks, we can turn that around in time for review.
Sure, if everybody is agreed. Okay, great, thank you.
Page 26, I made chart 6 just a little bit more legible, and then added a paragraph at the top of page 27. So this entire section on page 27 into 28, I added to just sort of, it felt like this section kind of ended abruptly. And if we're talking about cost growth, then it just segued into causes of significant growth. So I tried to add a little bit of context around how do these projected increases compare with our projected increases in revenue. I think this isn't a surprise that we've seen the pension costs grow faster than general fund revenues up to this point. And as you heard in prior testimony about the latest consensus revenue forecast, we expect general fund growth to flatline a little bit in future years. So I added a little bit of context and some charts here just to show, using 2 different time periods, how these costs have increased or are projected to increase relative to how we assume growth in our revenue base is going to increase. So chart 7A uses FY21 as the base year. That can be instructive because FY21 was sort of the year before we saw the sudden increases in the ADAC that prompted this entire task force and this conversation. Because remember, our fiscal target is to look at that size of the growth from FY21 to 22. So FY21 can be a good base year to look at for that. What I did here is I just indexed the growth to show what the percentage increases are. So you can sort of compare apples to apples and an easier way than if this was dollar terms, because it's sometimes hard to compare hundreds of millions versus billions. But if you look at rates of projected growth, it's a little bit easier to get your head around. So, that everything starts with a value of 1 in FY21. But the way you would read this is, that source general fund tax revenue goes up to 0.147 by FY26. That means by then it would have increased by 14.7% above where it was in FY21. Same interpretation for the ADAC costs. So the ADACs by FY26 will be either 67% or 62% higher than what they were in FY21. On page 28, it's the same type of data, only I used the year FY22 to really look at, okay, once we factor in that really big year-over-year increase from FY21 to FY22, how are things looking moving forward? And revenues are expected to grow by 8.9% over 22's value. And that's not a compound growth rate. That's just the amount we're projected to collect in 26 will be 8.9% higher than the amount we are projected to collect this year. And then the same with the same interpretation for the 8X. The compound annual growth rate is mentioned in the text leading up to those graphs, though.
Can we pause for just a minute? I'm just trying to take in a new piece, and I just want to make sure that I'm understanding it correctly. And I just need a minute.
Sure.
Thanks.
Good. Okay.
Everybody have time to digest that portion. Okay.
Page 29, we changed the word unsustainable and changed it to significant in the header. I also added some references to the appendix tables, but I need to make a minor edit in this that I did not number them as 1 and 2 in the appendix, but the tables in the detail are in fact in the appendix. Under pension liabilities, we removed the word unsustainable at the beginning of the sentence. And we're going to need to add a space between contributions and R. I also removed the reference to retiree healthcare in this specific section because we speak to it in another section, and that it felt inconsistent with the header directly above this paragraph. This is primarily dealing with the pension issue, this section. There were really no other substantive changes. Yes, sir.
On page 29, under pension liabilities, 2 lines down from there, there needs to be a space.
Yep, we got that.
Chris already mentioned it.
Right. Still trying to read as I go through. Getting a document on Tuesday is hard to get to in the day.
At the end, on the top of page 30, under Great Recession, I added the last few sentences there primarily to add some context around what happened when you factor in the Great Recession versus looking beyond the Great Recession, in terms of the fact that most of the actuarial loss due to investment performance falling short of assumptions is attributed to those years in the Great Recession. The years from FY11 through FY20, while performance did fall short of assumptions, it was a much smaller impact to where we are today. Really, most of that impact was concentrated in those Great Recession years. So I just wanted to add a little bit of context there. And I modified the numbers in that slightly because in order to be sort of ideologically consistent with how we're treating these numbers, instead of starting at FY08, I started at FY09 because that's the beginning of the current amortization period. So it's hard to do an analysis that starts at FY07 in some things, FY08 and others. So just for consistency, it's sometimes good to show beginning in FY09, just to be consistent that we're talking about what's happened in the current amortization period. I also added, where are you? Okay. Look further up. Made no changes to the actuarial rate of return section. Yeah, I just added footnotes. On page 31, I added a little graph just to show what the average investment performance is, and this goes back to Molly's point. I added a footnote here to try to hit that issue around investment performance, but I did not add that investments is outside the scope of the task force's work. I can explicitly add that.
You know, as long as it's described, you know, I just, that's one of the issues that people were very concerned about in the winter, and it is not something we can address, except that the Act 75 addressed it by making changes to the committee. So
Right.
maybe it just is that changes were made to the committee. Or you don't call it committee, commission? Is that what it is?
Commission,
Now the
yeah.
commission.
Yeah.
There was a committee.
Hold
I had one other question about the retired teacher health benefits paid from pension fund section. Have you gone through that? You're sort of right at that point.
We're right there.
I had a note to myself on last week's that we were gonna link to the treasurer's letter there, and I don't see that.
Just add a footnote. Or-
Either a footnote or in the text. I don't really have a preference. I just think having a link to that letter is important since she addresses it directly. Do you think a footnote is better? Either one.
So if you go back to the chart on page 16 that describes what happened in 2021, it describes the changes to VPIC, the reform membership and, requiring experience studies on a 3-year basis and solely empowering VPIC to adjust the actual rate of return. So that's what's captured from Act 75. I don't know if that fully gets to your point, but it does explain the changes that were made in Act 75.
Yeah, maybe just to say that those changes happened in that way, and we're dealing with the money piece,
I think we could do that. We could add a sentence to that footnote somehow, I think, footnote 26. That explains.
Yeah, it's good for us to have a place to direct people's attention if they ask.
I did not make any.
Are we okay with that?
Under demographic and experience, I did not make any substantive edits. I think I added the words as noted above on page 32. And added some parentheses to the bullet points to explain what we specifically mean by demographic experience and what other economic experience factors, just to try to differentiate so people know what we're talking about when we say what's a demographic or an economic assumption. As part of that third bullet point is new text.
We're gonna put something in there about demographic.
I have demographic data in the appendix at the back.
Oh, okay, great.
That provides sort of an overview and tell me if this doesn't feel right, but I think whenever we do the final report in December, we would have a section dedicated to demographics.
Sure.
And not only would it be sort of background, but we would draw on that information that we received from HR and from the treasurer earlier in this process. That kind of shows what the different trends are in membership and things of that nature.
Chris, can you put a note there that there's something in the appendix? Because I have had a note also Chris will put together. So it feels like last week people thought that would be a good place for it. And if it's in the appendix, that's fine, but just a note that says see appendix.
Could do that.
Everybody okay with that?
I'll put that footnote in the demographic experience bullet point to say a C appendix for overview charts of the current demographics. Okay, changes Assumptions, I did not make any changes to that paragraph. The last bullet point on page 32 is going to be reformatted. That is not a sub bullet point. That will be sort of it'll look just like where it says changes to assumptions above. It'll be its own paragraph. Sometimes the formatting stuff doesn't come through and track changes the way that you wish it would. Page 33, charts 8A and 8B. You've seen these charts before, but I enlarged them and tried to make them a little more legible and added a descriptive paragraph below.
It charts 8A and B or?
8A and 8B.
Okay.
I think when we make these available, we'll make them available with magnifying glasses.
Yeah, it's kind of hard to capture a lot of this on the written page without it looking crazy, but fortunately, whenever so many of us are in that mode of pulling things up electronically, things are a little bit easier to read, but I just want to make sure people had some sense of what the relative contributing factors were between what drove the unfunded liability higher and lower in the aggregate. And yeah, those charts, similar story on page 34. Those charts were you've seen before, but I tried to make them a little bit clearer just to show what these ones aren't showing what different factors contributed, but each year how much did things increase. And the raw data that backs up these charts, which is built from data that both the treasurer has presented and in all the actuarial valuations, and you go all the way back, is in the data appendix at the end. So if somebody's really curious to see what did our mortality assumption add to the unfunded liability in 2012, they can go see that number right there.
It's on page 33, just see tables. I assume those will be numbers at some point, or is that?
That's going to say, please see tables in the appendix, yeah.
Gotcha.
I made some, so I'm on page 35 now on OPEB. I made a few textual edits here. So I just added a few words like subsidized and to retirees in the first paragraph to try to explain what exactly it is we're talking about here. I added that second paragraph just to sort of provide some context that, you know, although some steps have been taken to lower the cost of the OPEB benefit over time, the fact that we're not pre-funding and the fact that we have to use a much lower discount rate for our liabilities means that this is a really, really big source of long-term unfunded liability on our state's balance sheet, and that can have an impact on our bond rating. So that the whole point of that paragraph is steps have been taken to try to contain the cost, but we really need to try to find a way to pre-fund if we're serious about mitigating the impact that this benefit has on our balance sheet.
And this afternoon, both Treasurer Pierce and Senator Kitchell, who's the chair of appropriations, will be with us to talk about this issue.
And to this point, I just made it a couple, like, you know, I added the word government or the word bond in a couple spots just to add some clarity to make sentences flow a little bit more consistently, but those additions are not material, but I did add the last sentence on the second to last paragraph, if Vermont was pre-funding its OPEB benefits, to try to hit the impact of pre-funding to our long-term liabilities head on. So if we were pre-funding and could instead use a 7% discount rate, our long-term liabilities would decrease by $1.68 billion. I made some edits to the two paragraphs on page 36. The last paragraph is new. And that was my attempt to just sort of tie up this section and provide an overview of where we are right now. I am certainly open to any comments or feedback you have on this, but this was again where I just kind of felt like it ended abruptly and we needed to wrap up the section with some, okay, where are we on this right now? And what does this mean? And sort of provide a preview of what to expect moving forward.
Everybody has- like just that.
On page 37, actuarial issues and analysis. Thank you, Molly, for your suggestion that you sent me after our last meeting. The second sentence was my attempt to work that in. I think this was your suggestion.
Did I send it? I'm glad. I
You did. I may not have said thank you, but thank you. So that second sentence is new. As the task force continues to work toward recommendations, it has requested actuarial modeling to evaluate the impact of possible options and scenarios involving multiple options under consideration. And then we added a bullet point 5 is new. And we had spoken to the fact that the prior version omitted that, but subsequent to us developing the prior version, we developed that actuarial effect. And then there's a new next step section on page 38, which we can certainly add to or make changes to. And the rest of the document is primarily the glossary, which I think we've seen last meeting. We'll do a final look on, making sure that's all consistently formatted. Then in the appendix, we added just some sort of at a glance data, some data on what the plan descriptions are, so people can see and have sort of a really quick reference about how the different groups compare to one another. And some sort of high level demographics about, what does the membership look like for each group? What have the trends been between retired members and actives? And what the ratio has been over time. So I believe you've seen that data in prior presentations, but I expect the final report that this task force develops will have pretty sizable data appendix at the end. And the more we can sort of add to it now, we'll just keep going. And we can use some of these sections to support their own dedicated pieces of the final report that dig into topics like demographics in a little bit greater detail.
Yeah, I just want to come back to the next page on page 38. That's where I initially went to look at where some of that discussion that was captured in the principal section to see how that was reflected. So I appreciate you walking through the principles. And I think a lot of folks are going to open up this report and they're going to say, what are the recommendations? And obviously we're still working through that, but I'm wondering if we can direct people in bullet point 2 or number point 2 back to that principle section. Something along the lines of consistent with the task force's adopted principles. So people can look back and see the principles that will guide our work. I'm sure a lot of I doubt all the people who are interested are going to digest all 30 pages of the report. So my suggestion would be to just point back to those values that will guide our recommendations in that number 2 somehow.
Perhaps we add a sentence that says recommendations will be guided by the principles set forth on page.
That would work from my perspective.
Everybody okay with that? And I think that, Molly.
Go ahead. I'll go ahead. Okay, I just had a note to myself here that we were gonna say something about the fact that this is the recommendation that then goes to the legislature and there's a legislative procedure after it, so that people weren't like, okay, this is a done deal. Do you remember that discussion, Jeanette? I think you were talking about that.
Yeah, it does, 3, it says the report will be sent to the governor, legislature, and trustee. But I think that it is worth putting a sentence in there that says the recommendation will be sent, but the final decisions will be have to be decided on in the legislature. How, I don't know, I'm not thinking very clearly about how to word that, but this isn't what is going to be unless this is what the legislature adopts, whatever recommendation. So
And the governor needs to sign.
And the governor
I mean,
needs to
There's
sign.
2 steps to that process.
Right. it has to go to both chambers for review and the governor. Yeah, I think that's worth putting in there, Molly.
And it's probably most important in the final report, but just
But
to
just so people know that.
note it, yeah.
We could perhaps add a sentence that says, you know, legislative action would be required to ultimately adopt the recommendations.
And the governor's. Good suggestion.
I just remembered you were speaking about it.
And what I was going to remind us was that in the, Eric's comment here, that in the final report, there's almost always, when a final report is given, there's almost always some kind of a summary at the
Oh, good.
beginning that just kind of does the highlights.
Mhm.
And so people can oftentimes, when I read reports, I read the summary, the intent, and then the results.
That was done in the 2009 Retirement Commission.
Yeah,
They
yeah,
had an executive summary, which basically reviewed the recommendations
yeah.
in shorter.
That will likely be the last section we write.
Yes, I would think so. But we won't put that in the interim report here because we're not at that point yet. Are we set?
While folks are making their last few observations, I just want to send a big shout out of thanks to Chris and David. This is a tremendous resource here as it logs all of the work that we've done and compiles so many of the background charts. So thank you both for your collaboration on this.
Yes, thank you.
Yeah, it represents a
Thanks,
lot of
Sarah.
hours.
Okay, I guess so with our blessing, submit it. I guess.
It'll take a few updates and then we'll have to run it through editing.
Oh, yes, we should, I'm sorry. I keep forgetting about little things like votes. Sorry, okay. Would somebody like to move to adopt this interim report with the changes the edits that will be made that we've all agreed on? I think we've all agreed on each of the edits as we went through. Okay, thank you.
I'll second if you need one.
Don't know that we do, but it's good to have. So, we'll wait for Peter to come back and sit down and then we'll take a vote.
Can I add a comment? I just want to go on the record to say that this, while I'm ready to green light this with the vote, I do want to say that it's been a really frustrating process to get things with very little notice before the meeting to review it. And then I do appreciate Chris going through the changes this morning, but even as he does that in a somewhat rapid pace, because he's more familiar with what's in there than I am, because he basically wrote this report. I just want to say that it's been a frustrating process, and I hope that we can figure out a different process for writing a final report. I know that, Jeanette, you're really great at making sure that people agree with the edits by continuing to say, so everybody agrees with those edits. And I'm not sure that I agree with the edits, but I'm not going to slow this process down for the interim report.
Thank you. And I think that it is a problem with us meeting every week. So we meet on Wednesday and then, so that gives Thursday and Friday among their duties for them to do any writing and revisions. And so it is a problem in the final report. We might want to delay it, allow more than a week in between so that people do have a chance to digest. We can look at that schedule when we get there. And I do understand it is really hard to get something on Monday and then have to look at it
Yeah,
by.
we do have an extra meeting now because we are
Because-
not meeting next week. So
So,
it is
we-
possible to have an extra meeting at the end of the process.
and we'll try to maybe even work on sections and send them out ahead of time and stuff. So I do appreciate your comments and did hear a little bit of that in the car this morning also.
But I mean, the final report will look very much like this. There'll be some updates based on the new valuation that comes out in October. The biggest difference between this report and the final report will be the recommendations. I mean, most of this background data is not going to substantially change.
Right, and I think of this as like your first draft that you hand in to your teacher, so you have an opportunity to go back and get feedback from members too, and we'll have a broader discussion on more language, so.
And I think, John, you were mentioning earlier the abstract, I'm calling it abstract, you called it executive summary. And there's potential right now that we could, we not in this moment, but on our agendas coming up, that we could start to extract sentences, key components that might go into that, and then it can make itself over time with agreement from the group.
Yeah, and I think of this, I know we called it an interim report, and that's what we called it in Act 75. I think of this more as a progress report. And it's just showing the progress and where we've been and what we're doing, so. But as Corey is right also that people might have other things that they would like to even see in the final report, so.
Can I make a comment before we
Sure.
vote? I think this document is an excellent synopsis of the back and so forth. There's some elements of Act 75 evaluating the impacts of state and local economies and evaluating the effects on recruitment and retention that will ultimately depend on what recommendations are proposed. But we'll need to the background won't change, but some of the analysis of any recommendations I hope will that we include the points identified in Act 75 as a measurement tool to gauge any potential changes. Understanding, there could be some. We've had some testimony on some of this. So in theory, there could be more of this included in the draft report. But I think the heart of this analysis will ultimately depend on the recommendations. But we will need to undertake that analysis in the final report.
Anything else? Thank you. Yeoman's work. I never knew what that meant, but I like it.
I think it means it was a lot of work.
Are those guys that send the back down in the galley of the ship? Or are they the yeoman?
I'm not a boater, Madam Chair.
So we need to take the vote.
Yeah, we will. But I just had to get my yeoman comment.
Okay.
Okay, thank you. All right, so given where we are, do we agree to accept the interim report with the edits made that we agreed with, whether we were completely 100% not in favor necessarily, but understanding. So all those in favor of accepting the interim report? You can say aye.
I'll give you a verbal aye, since you can't see that I'm holding my thumb up.
Okay. All right, I think that is, and just because we have a non-voting member here, I would just ask him if you didn't vote on the acceptance of the report, but do you think it's a valid report.
I do.
All right, so I have no idea what time it is.
10:15.
10:15. Oh, it is time to take a break. We will take a, let's take a 10-minute break. Can we do that? And come back at 10:10? And, did you say it's
10:25,
10:15?
yes.
10:25. And talk about, then we can have a general discussion about the options that came up from the small groups and share them with you.